Hey y'all, Jordan Moorhead with the Moorhead team here, going over a quick Austin real estate market update for you here today. And as always, we're going to be going month over month and year over year. So we just recently got the August market stats. We've got a bunch of real estate news we've gotten here in the past week too. So we're going to talk a little bit about that also after we talk about specifically the Austin market. So as you can see, month over month, prices are going up a little bit. Month over month, sales are also going up a little bit. If you look, our closed sales are up maybe 50 month over month. I know that's down year over year, but we're seeing a trend go up month over month, which is great. And we typically would have seen more in June or July, where now we're starting to see more sales happen into the fall. And I think a lot of that has to do with the rates coming down. Of course, because sales are up and the prices are up, the sales dollar volume is up. So that's 1.44 billion in July versus 1.49 billion in August. Months of inventory is down a little bit, so that's just a function of more houses selling and less houses sitting on the market. If you look at our new listings in August, that's down, call it 600 something listings versus July, we had 4,300 come to the market. In August, we had around 3,700 come to the market. Now, that means our active listings is down because we had more sell and we had less come to the market. So we had more taken away, and we had less brought to the real estate market. So active listings is down. I think we're going to hover around this 15,000 mark for a little bit as we work through some back inventory, and we have more inventory coming to the market. As the market improves, I think it's going to change a little bit there. Pending sales, that's down a little bit month over month. It's actually up year over year. If you look at that, up year over year about 8%. So that's getting better year over year. It's always down a little bit month over month moving in because we're getting into the school year starting. We do usually see a little bit of a pop. They say when the football season starts, the market picks back up for a bit, generally until around the holidays. So that Thanksgiving holiday through Christmas is kind of our dead zone. As agents, we say that's a great time to go on vacation because the market just really slows down a lot. So if you're gonna sell, get it done now. Don't wait till Thanksgiving type deal. Average days on the market, that's up a little bit. Average close to list price, we've kind of been hovering around this 93% mark for a while. There's so much that goes into that, and I don't want to beat a dead horse here, but average close to list price, I think we'd see a higher average close to list price if everybody listed their homes properly based on the comparable sales in the neighborhood and the condition of their home. People overprice quite a bit, but we're still seeing around 93% of average close to list price. So yesterday, the federal funds rate was lowered by 0.25%. Mortgage rates are about a year low. It looks like the Fed funds rate is going to keep going lower. I think we're probably going to see the mortgage rate get lower, but nobody knows, and I sure don't. We're in the low sixes right now. I've heard it sometimes hitting the high fives with certain circumstances, maybe a buy down point or two. But it's getting more affordable to buy because rates are lower. It's also getting more affordable to buy because prices are about a 3-year low. So we're 2022, May through now, we're down 20 to 25%, depending on where you are. I think we've kind of hit a bottom here, but again, I can't predict the future, and I know that. Why I think we've hit a bottom is because we're starting to see rates go down a little bit. People are more optimistic about buying homes, and that's a big part of it. Everybody talks about the fundamentals and oh, what's the interest rate, and how's affordability doing? And that has a huge part in home sales because if people can't afford to buy houses, they're not buying houses. But what's happened the last 6 months or so is even the people that could afford to buy houses were nervous to buy houses because they didn't know what was going on. It looked like rates were going up and down. They didn't know if they were going to lower rates. They didn't know if the tariffs were going to be really bad for the economy. Seems like we have a little light now. It's telling us things are going to be okay, that rates are going to start coming down. If we see mortgage rates continue to go down, that optimism is going to continue to pick up. But I'm just here to tell you, we have 29 listings on the market. We have 10 under contract. We should have another under contract here today. So more than a third of the listings we have on the market are currently under contract, and most of that has happened in the last week or two. So we're starting to see activity pick up a lot. That being said, it's my personal opinion, and this is just my personal opinion from all the people I hear that are waiting to list until the market gets better. I think even if interest rates continue to go down and buyers continue to jump back in the market, we're not going to see prices spike for at least a year or two. My reasoning why for this is there's lots of people that are waiting in the wings to list their properties until things improve. Things are starting to improve. So I think maybe a little bit here early fall and a lot next spring, we're going to see people putting those homes on the market, which means even if the buyer activity picks up, I think listing activity is going to pick up too. And we're going to have a lot of inventory to work through. So again, we've had 3 years of declining prices. Things are starting to stabilize. So I think a lot of those people are going to come to the market now with those houses, which means there's still going to be an imbalance in favor of the buyer, and there's not going to be any reason to have any sort of bidding wars or people paying more for homes. So I think we're kind of in a stagflationary type period with home prices. Personally, I think that's going to last a year or two. Uh, I could be wrong. It could be shorter. It could be longer. Nobody knows those things. That's just my feelings from all the people I talk to that are waiting to see things get better until they list their houses. If y'all want any more info ever here or just have anything real estate related you need in the Austin area, feel free to give me a call or text 512-888-9122, or you can always reach out jordan.moorhead@kw.com. Have a great day, and we will talk here soon.